Hello, this is Steve Sanangelo from the SRS Rocker Report, and in this video update, I'm going to discuss the gold and silver investment bullion shortages that are only going to get worse going forward. And that is due to the massive debt and money printing that's just beginning. Also, we're seeing a continued disruption in the supply chain system. Record amount of Americans are now unemployed, and they're not getting their government checks. I've seen that the first checks that are going to be mailed out won't be until April 25th, and it depends on how much you make. And each week, if you make a certain amount of money, a higher amount of money, they'll send out another check. So if you're making 40 or 50,000 a year, you won't get your check until in the beginning of June. And so this is going to negatively impact, I believe, the markets and the financial system, which will force more investors to try to acquire physical precious metals. All right, let's get started. Now, I have been saying in my video updates about the silver market dynamics, and it's very simple. I believe global mine supply will contract this year, and I said that we could see a fall of 100 to 150 million ounces this year by the end of the year. At the same time, we're seeing an increase in physical investment demand, and that's the retail, the smaller products. But I did say, however, as the financial system becomes under more strain, large investors, hedge funds, and institutions will start buying 1,000 ounce bars. Now, that's what we're seeing. And now it's hard to get the 1,000 ounce bars. Now, in an article I posted a few days ago, Mexico mining suspension to hit silver supply. We must remember Mexico is the largest silver producing country in the world. It produces nearly 200 million ounces a year. So mining in Mexico has been shut down by government decree until the end of April as part of a measure to contain the virus outbreak, having not been granted an exemption as an essential service. Now, I have heard that some projects are going to remain open, but most of them are either winding down or they're put on temporary suspension for that month. Now, here's a list. This isn't a total list, but here's a list of mines and companies that I've seen that are already start shutting down. Newmont's massive Penasquito mine, Gold Resource, Sierra Metals, Argonaut Gold, Agnico Eagle is shutting its mines, Alamos Gold, Pan American Silver, Grupo Mexico, which is the third largest copper producer in the world, is winding down, Fortuna Silver, Endeavour Silver, First Majestic, Core Mining, and Telson Mining. They're all starting to suspend production. Now, this is what's fascinating. Back in 2008, I remember when the price of silver went from 21 down below 9 to the $8 range. There was the same thing that we're seeing today. Investors started buying all the physical bullion they could, and there was a 2-3 month waiting list to get coins, bars, and rounds. And so what I saw investors doing, they were buying the 1,000 ounce bars. And if you went on APMEX back in 2008, there was about a dozen 1,000 ounce bars at a time with serial numbers. So if you purchased that bar or a couple of bars, they would take it off of the list and then they would add new ones. Well, I looked here and currently they're out of stock. Now, I also spoke with Dan at Cloud Hard Assets, and that's the company that I sponsor at the SRS Rocker Report website, and they told me they can't get any 1,000 ounce bars for 4 to 6 weeks. So already what we're seeing today, different than what was happening back in 2008, we're seeing a huge curtailment of silver mine supply, and at the same time, you can't even get these 1,000 ounce wholesale bars. Now, I have been posting some updates about the different precious metal online dealers. These are some of the top leading dealers, what their Silver Eagle buy prices. And I've recently included Cloud Hard Assets because I was surprised at the difference, how much higher some of these companies' websites were charging for their precious metals for the Silver Eagle. And so right here, we've got the top, I think these are the top 4 online dealers. And this one, these are for buying 1 to 19 coins. Now, if you buy 100 to 500 to 1,500, these prices fall. But I think if you buy 1,500 from one of these companies, you're still spending $24.50. Now, Cloud Hard Assets, I spoke with Dan at Cloud Hard Assets early this week, and this is based on April 6th. This is based on a $15 spot price. Cloud Hard Assets is charging $6.50 over the spot price to purchase the 2020 Silver Eagles. So I just wanted to let the viewers know that, and they can contact or find out more about Cloud Hard Assets. Here, you can go to my website. I have the Precious Metals Investing tab at the SRS Rock Report, or you can use these phone numbers here, and they offer the one thing that's very important that investors looking to purchase precious metals that may have not before. Right now, it's hard to get product. And so they're telling people it's going to be a month, 2 months, 3 months. Now, in the past, there have been some precious metal dealers that have sold metal to clients, investors, and they didn't have enough product. And in time, they actually went under, and a lot of people lost they could not get the metal. The one thing that Tom Cloud does at Cloud Hard Assets, he puts the client's funds into an escrow account until the metal is shipped. So if they don't have the metal, they can't get the metal, your money is protected in the escrow account. So again, it's Dan or Tom at Cloud Hard Assets. If you want to ask them any questions, very easygoing, and they do offer some of the best prices I've seen in the market. Now, before I get into the massive money printing and debt, I have to talk about the energy. I know a lot of people's eyes roll over about the energy, but it's the most important thing that drives the economy. And this was a recent article I put out. Goldman Sachs said on March 18th that global oil demand fell 8 million barrels a day. They did a new update about a week later. It was almost 19 million barrels a day. And then on March 30th, they said it was 26 million barrels a day. That's about 25% of global oil demand within a very short period of time has fallen off. I think it's actually more now. I think I'm hearing estimates now of 30 million barrels or more. This is very detrimental to the whole global economy and the financial system. Now, SP Global Market Intelligence, they're saying no place to go, oil storage filling up amid collapsing demand and excess production. It says the Permian Basin shale oil drillers, which is the largest shale oil region in the United States, the worst bust in generation, now face a once unimaginable threat that there could soon be no place to put their crude. Now, this right here shows, this is the second part of this article, current crude stockpiles are 66 million barrels lower than they were at peak back in 2017. So we could still fill this up here, but with the US now at 6 or 7 million barrels of lost consumption, this is starting to fill up these stockpiles quickly. And here it says the near record storage builds the US saw at the end of March are just the start. This analyst wrote on April 1st, as refiners cut rates to operational minimums and begin to idle capacity, even more barrels are going to head into storage over the coming weeks. Up to 6 million barrels a day of light sweet crude is at risk of becoming stranded in April if refining utilization rates are cut to 50%, and they are starting to be cut more. Most of these barrels are in the Permian, Bakken, and Eagle Ford, and that is the shale oil industry. Now, this gentleman, Ryan Sitson, he was on CNBC. He is one of the Texas Railroad Commission. It has nothing to do with the railroad, what it does, but the Texas Railroad Commission in the history of the U.S. has been the one that has controlled the oil output. They have been they controlled the U.S. oil markets up until the peak in 1970. Now, he came out and he said today, I'm not participating in the OPEC call tomorrow, but if I were, I'd say at least 20 million barrels in cuts are needed, and the U.S. will have to cut at least 4 million barrels in the next 3 months. If nothing is done, inventories will fill up in 2 months, at which the point, the world would need to cut as much as 30 million barrels a day. Now, what was interesting, he got a lot of negative replies. Whatever credibility this guy had was lost in this tweet. How stupid is this guy? Organically, not a chance. Does he even work in the energy business? And based on what I've seen, this guy, he's doing this to show, only for show and gain publicity, as he's losing his seat soon. Now, this is typical. This is the typical reply to people who, this is very bad what's happening in the US. I believe it's 6 to 7 million barrels of demand is gone right now, and it won't come back for quite a while. People are not going to get back on a plane. They're not going to go on a cruise. They're not going to be traveling all over. So we're going to see this low demand for quite a while. And I believe Ryan is correct. We need to be cutting a lot more than the market wants to. And unfortunately, a lot of people don't agree with it because it's very bad news. So the dream of U.S. energy independence is dying along with the shale revolution. You're facing a situation where there's so much demand destruction from people staying home, and there's so much oil flowing right now, there's no place for it to go. Commissioner Sitton, it's the same gentleman here, told the Houston Chronicle, the supply chain is facing a problem, and it backs up all the way to the gas stations. I believe the situation is going to get much worse. And this is very bad news because oil is what allows economic growth and also what allows all these financial assets to remain viable. So bonds, the money market accounts, the pension plans, the 401ks, the stock market, even the real estate prices, they're all going to be in severe trouble now that we've lost all this demand for oil, and the supply is going to fall, and I don't see it returning to the level anytime soon. So let's get to the debt and the money printing, which is going to positively impact the precious metals. Now, this is from the U.S. public debt. This is the total here. And this is from the beginning of March to the end of March. And in 1 month, the U.S. debt increased by $279 billion. Now, since they started rolling out all these programs at the beginning of April, the U.S. debt increased $219 billion in 3 days. In 3 days. So what does that look like? Well, here's the $219 billion in extra U.S. public debt in 3 days. But here, just to give you an idea, this is the global gold mine supply value in 1 month is about $15.3 billion, and that's based on about $1,650 for gold, the gold price, and only $1.1 billion for the global mine supply for silver during 1 month. So the U.S. government debt has increased $219 billion in 3 days compared to the total value of all the gold and silver mined in 1 month at $16.4 billion. Again, this is just showing you how out of whack the financial system is becoming, and that the real money, gold and silver, the values are so much less to all this new debt. And now the M2 money supply in 2019 increased $940 billion. From here, this is this pink area. It was $14.41 trillion at the beginning of 2019, and it went up to $15.35 trillion at the end of 2019. So it increased $940 billion. But in just the last month, in just 1 month, from February 24th to March 23rd, in this little gray area, the M2 money supply in the United States ballooned by $770 billion. And many people are familiar with this. This is the Federal Reserve's asset balance sheet during the 2008-2009 financial crisis. In just 2 months, the Fed purchased $1.3 trillion of treasuries and mortgage-backed securities in 2 months. However, in just the last month, the Fed has purchased $1.7 trillion in mostly treasuries and these mortgage-backed securities. So we see the situation today is far worse. And I've heard estimates that the Fed would increase this up to $7, $8, even $9 trillion. This is all very good for the precious metals. Now, lastly, This is the actual US currency in circulation. These are real dollar bills, $1 bills, $20 bills, $100 bills. During the 2008-2009 financial crisis from September 2008 to June 2008, 9 months, the US Treasury, the Federal Reserve, added 74 billion of new currency in circulation. But in just the last 2 months, from February to April, they've added 81 billion in actual Federal Reserve notes, mostly $100 bills. So if we look at that compared to gold and silver, the US Treasury has added 81 billion of new currency in the world, 81 billion in just 2 months. Well, 2 months of global mine supply is 30.7 billion and silver is 2.1 billion for a total of 33 billion. Again, this is just the US. A lot of other countries are adding their money supply as well. So $81 billion in just 2 months pales in comparison to the real money of gold and silver. Now, as I mentioned, I didn't think we would see the shortages taking place in the 1,000 ounce wholesale bars already, but we are. It's very difficult now to acquire these 1,000 ounce bars. That wasn't the case in 2008. So I think as time goes on, and as these supply disruptions that are still taking place in the economy, and Americans aren't getting their checks yet, it's going to take another month or so before they start getting their checks. The situation in the markets are going to get worse, in the financial markets. So I believe more and more investors are going to try to acquire precious metals, and there's just not going to be the supply. So we could see the premiums continue to increase as the paper price might stay low, or the paper price may start to increase as well. So we need to take a look at what's happening in the oil market in the US and globally. Because if they don't start cutting oil, we're going to see the oil price get back below 20, and it could head into the single digits. And that is going to destroy the global oil industry much quicker than anything else. And it just won't come back. And so all the financial assets that are based upon a growing economy need that growing oil production to remain viable. So I believe we're going to see a major negative impact of financial assets, whether they're US treasuries, bonds, it's the money market accounts, the pension plans, the junk bonds, all that is going to be in severe trouble. And even the real estate markets. We haven't even begun to see the damage that's going to be taking place in the real estate markets. So I believe the best place to be is in physical gold and silver if you can get it. And please check my website, the SRS Rock Report, for new updates. And also go to the Precious Metal Investing tab on my website if you want to contact the Cloud Hard Assets. Well, thank you very much for watching this last video update. If you have not yet subscribed to the SRS Rock Report YouTube channel, please consider doing so. Thank you.